All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up. Don't forget to like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So we had a pretty eventful week, all things considered. We did rebound pretty nicely off the lows. We talked about this on Friday last week. And obviously a good bid there. When we followed through Monday, Tuesday, obviously markets closed Wednesday for Christmas. We had a half day on Tuesday. And then we had a little bit of a retrace day on Friday. And you can actually see we kind of round tripped a little bit. We went down and we recovered pretty nicely, closed near the highs. Well, not the highs of the day, but closed kind of during the midpoint of the session. Overall, though, we held the 50 moving average by the end of the day, and we did complete this retrace. We are now into the Santa rally period, as we talked about last week. That does not mean we have to be green every day, but that's just a strong seasonal effect that usually takes place, especially in bull market years. Look, we're up 27 or 28%, I think, for the year. I think the Nasdaq's up even more than that. But right now, we did have a pretty sharp retrace on Friday. There are some concerns about yields right now. As we get into next year, they have not really come down. We'll definitely talk about that in a minute. But right now, at face value, I still think we're going to give the market the upside bias for now. I do think January can get a little bit tricky, and I think there could be some headwinds in January. But right now, I'm still giving the market the benefit of the doubt here. We've held every support test that we've had here, and we're continuing to just simply make higher lows, pretty much repeatedly. Until that changes, we got to give the bulls the benefit of the doubt here. Additionally, we're still seeing kind of sentiment not really be what you would expect. So if we take a look here, AAII, bulls declining every week, and bears still kind of upticking pretty much every week too, and even into the strongest seasonal period here of the year. Again, AAII is not perfect; it's not everything, but we're still seeing that. We saw a pretty good spike in volatility here, and my belief personally is I think a lot of people are eager to short here, and that's kind of been the case really all year long. I would love to see some sort of blow off move to kind of get that out of the market. I don't know if we're going to get that, but I would love to see it, so this market can top properly. You could make a case too, and I know this is going to be talked about, but you could make a case you have a head and shoulder here. Right there, potentially it's not triggered yet. Again, I don't love these patterns. They fail a lot. I think they're very easy to see, and I think that's why they fail a lot, because a lot of people jump on them. It's worth mentioning though, and if it triggers, I'll entertain it. But right now, I'm just going to mention that. And we did hold the support here at the 50 moving average. So right now, it's not even a triggered pattern. We could we could gap up Monday and go higher, and it could just simply kind of get negated. I do think if we get through 6,000 SPX, we're going to go make new all-time highs. So that's just really what I've got right now. If we break 5850 with some conviction, maybe even like 5870 would be a little bit of a concern. Then I think that we could see some more dipping here, maybe down to the 5725 kind of area, maybe even 5700. But right now, again, seasonally pretty strong. I don't really see the reason to bet against the market right now. And again, these corrective periods, when they happen, if we're going to have a 20, 25, 30% correction, you don't need to get the first 2% off the highs, right? So, you can still get 5% off the highs and still make a very good chunk on that. I see a lot of people trying to front run a lot of these things, and a lot of the time it doesn't work, right? Here, pretty much all of these, these dips were bought and we went to make new highs. So just be aware of that stuff. But in any case, again, still giving the bulls a bias for now. And a part of that is because of the Qs here. And you're still holding trend, no real issues here with the Qs. And it continues to just, test support with more higher lows. And, if the Nasdaq is leading, that's typical bull market behavior. So Q's still hanging in there. Again, I don't see much upside past 540 right now, just to caveat that, at least in the short term. But right now, again, it's holding up, and we just continue to make higher highs and higher lows. So Qs are hanging in there. IWM got above our key level of 225 on on Thursday, and wasn't able to hold it. So we just couldn't hold that. You could make a case it's starting to bear flag. I don't really, care all that much about that right now. I'm still looking at the weekly as more of a retest of this green bar low here. We'll see how it closes out the month, which is in 2 days. We get a bid into the end of the month. It's just going to be kind of an inside candle there. But 225 to me above that opens the door for 230 and maybe like 232, 235. The Dow here I still like as well. Again, a retrace day here, but again, just be a test candle. We break through 433. I think this has some legs to maybe even 440. Possibly higher. We'll see. SMH here was down 1% Friday, but not terrible. Right? We continue hammering on this trend line here, and we have, right, so each time we hit this trend line, it's with a lower low up until recently, right? We've been making a higher high, and we made a lower low to here, but we still have a higher low to here. So it's structurally starting to work out a little bit better here for SMH. And if this pushes higher, I can't get bearish the market. If the semis are leading, you want to give the market the upside bias. It's something that's always been a thing and something I'll always continue to do. If this fails, then we need to start to really reevaluate things. But right now, I think I would give the SMH a bias to 260, maybe 265, as long as we can break and hold above 250. I'll cover Nvidia as well because it's a very important stock. 140 in this trend line here. Through that, I'm giving it the upside bias to 150. So watch those two. IGV there, you can see the head and shoulders there as well. Kind of looks like the spiders, it's a little bit more stretched with that big thrust there. Again, has not triggered yet. Don't fall in love with it yet. Hasn't triggered. Back above, at this red bar high here would pretty much negate the pattern here. But below 100, it could take it down to $90. Actually, in fact, I actually did a measured move on this. Sorry, it's not going to be perfectly straight, but it's okay. Takes it right down to that. I mean, this is why charts are so great, right? Just look at the symmetry there. Right, so that's the level it broke out of, right? Resistance, up and handle. So this would be like a picture perfect back test. And if that pattern did trigger, that's probably where I'd be looking to buy the dip there for a bounce. At least a swing trade, good swing trade. But anyway, nice chart there. Nice, pretty chart really. Nice and symmetrical there on IGV. Transports here, again, had an up week, pulled back on Friday like everything else did. Again, we're still looking at about 16.2 or so as resistance, and then if it can get something going, we can look at 16.6 again. But right now, maybe a failed breakout. So we got to keep that on watch. It never technically made a new all-time high, even though this was I call it like a fake all-time high because a lot of it was due to the short squeeze on CAR, which skewed the entire index. But nonetheless, it's pulled back nicely, and those are the levels we're watching. I think down here would be a monster support level if we went straight into it. So, 15.3, maybe even this pierce of that, maybe down to the 200 MA, 15,000 even. That trend line there has been holding for a while. All right, interest rates here. So this is what's going on right now. This is why the market has been sputtering. At least that's the story. And you can see the 2-year here. Look at where it is. So this yellow line, that's the EFFR, right? I mean, it's right on it, right? It's literally right on it. I told you guys months before the Fed was cutting, I said 4.4 area would be a big level. And look at the market agrees, right? That's where we've stalled out, just beneath that area. And the Fed funds previously was up at 458. So up in that area, it's now at 433. Why does this matter? Because this is where the Fed funds rate needs to be in line with. And if this starts breaking up, we got to bring back the H word. So the opposite of the C word, which is cut. I don't think it's going to happen. That's just my thought right now. I don't think it's going to happen yet. I don't think it's ready. I also think that positioning wise, and this is just a observation, I don't have data to back this right now. And I'm not even saying anybody should take a trade off this right now, but I think yields are a little crowded. I think a lot of people are short bonds. And I think that will, and now again, I'm bullish yields long term. I've been for years. But I think in the near term, the surprise is to the downside. So if we get data that's moderately warm or not as hot as the market expects, I think we could see a dump in yields pretty quickly. That does not mean they're going to go back to 2%. I just mean, in the near to medium term, we could see some pulling back. We are into a little resistance here with the 10s, at 465, 47. And 30s, at 485 area. Again, not taking a trade off this right now, but just something that I personally, that's just my general lean. But that is a problem. Make no mistake, this is a problem, especially that 2-year. If this 2-year breaks above 4.4, the Fed can't cut, period. If they do, then inflation's coming back way harder than you think. And they know that. XHB, kind of a soft week, right? So again, this is reflecting yields. This head and shoulder top is playing out. It's almost played out to target. And you can see it's basically down to 100. But yeah, look at the softness of the bounce here versus the spiders, right? Nice V shape and then a good pullback candle. But look at XHB, just flat, right? Really flat. Actually, it was a red week. Yeah, technically it was a red week. So housing, a little bit, in a little bit of trouble here. Look at VNQ. Again, we talked about this failed breakout here. It looks like kind of an M top now, and it's starting to look like that. So obviously rates pulling back would help these out a lot, but that has to happen first. XLF's hanging in there. I still think XLF is okay, especially if we can get above 49.33. KRE, I'm still giving this the upside bias to 64. And then KBE, I'm giving this the upside bias to 50, 58, 59. These are just short-term levels. XBD hanging in there okay. Still very strong on borrowed time on the larger time frame. So oil, again, volatility is coming. It's definitely coming. Take a look at the Bollinger Band width. So this just measures the width between the bands. And when it's wide, that means, a move is, it's long, what do we say? Long in the tooth, right? It's really stretched out. When it's tight, that means volatility is compressed and it's ready to expand and release energy. Let's look at the weekly. Really tight, isn't it? So we know that this range here is not going to last very long. We're getting volatility in the oil market soon. Personally, but my dream scenario would be a quick flush on panic of some sort. I don't know what that is. It could be some deflationary shock type news. And then I would be all over that dip. That'd be my dream scenario. I don't know if that's going to happen. But that's what I'm ready for that if it happens. Right now, 72. Forget about that. It could be on breakout. Just be aware that the first move of a tight compression usually is wrong. Case in point here, I'll bring up copper, which we always talk about this last, but look at the width here, and boom, it tried to go up, and the first move, the first breakout attempt was up, and then it went down. It tried to, and this is a wacky move here, but it tried to retrace it, and it ended up failing. So when I say volatility is coming, I'm not saying jump on this first, move you see and go all in. I'm just telling you volatility is coming. Anyway, XLE here, I continue to love this, and I continue to see data like this. So dealers here now are net long with asset managers net short. I love this type of stuff. If you guys have been following me recently, dealer positioning is something I analyze very closely now. And if you're confused, dealer, just think of that as banks. Okay. Asset managers, generally hedge funds and things of that nature. They're short and they're long. Last time that happened was right before 2021. These guys all panic dumped the 2020 lows, and they capitulated at in October, right before the election, and then they all chased it on the way up. Now dealers, not to say that they're necessarily short here, they're just selling out. You could be selling premium, etc. But these guys are usually like chasers, right? So when they flip, it's usually off of panic or emotion. And it was right before a bull run this happened. This happened here. With XLE, you guys know my thoughts on this. I love the monthly. I love how it's set up here. Nice tight consolidation, and I think we're ready for an all-time high trend leg. If we do have a corrective move in January, where does money typically flow when it comes out of tech? Yes, that's right. It goes to energy. I really like energy here, and I'm going to continue to bang that drum. XOP, again, double bottom, OIH double bottom. I think these are set up nicely as well. All right, on the uranium space, CCJ, kind of a flat week. I still think it wants to go test 49, but recently, we've had some tail candles here on the daily, so buyers have been stepping up at 52. We'll see if that continues. I still think dips can be bought in this sector pretty much, for the most part here. URNM was green on Friday, so was NJ, so showing a little bit of relative strength there. Nat gas, nice pop here, and so seasonality, I think somebody commented on my channel the other day on this, and yes, seasonally, so I've been talking about this a lot. Usually the third week in November, like clockwork, it's the top. That's not been the case here. This may have something to do with the U.S. Now exporting more to Europe. I think this was kind of done by Europe to appease Trump a little bit. It's because it happened like right after the election, if I'm not mistaken. We'll have to just see how this plays out, I guess, because this could be a regime change where, typically we just get that dump in late November, and then it just dumps until March, like every single year, like clockwork. Maybe that's changing now. So we don't have enough data. It's only one winner, so we can't really make a call on it, but that could be an interesting case here. Right now, nat gas, though, 360 is resistance, and, 3 is support for now. I'll just leave it at that. I haven't been following the gas market all that closely. But interesting developments there potentially. Dollar index, again, slightly green this week. I think it can go higher, but it needs to do more consolidation. Gold, again, look at how strong, I mentioned this last week, but look at how strong gold is. Look at the dollar, 52-week highs. Look at the 10-year yield, right? I can type it in. There we go. Okay, basically 52-week highs, right? And look at gold. It's not far off the highs, is it? Look at the 10-year note. It's basically at 52-week lows. Gold is, look at the euro. And I'm having trouble typing here today, so. But look at the euro. Because this is holding up well, isn't it? I mean, this is pretty strong. So I think the case for 3,000 quarter one is still on play. It's just consolidating on the bigger time frames, just like it did here, just like it did here and here. This is just a consolidation pattern to me right now. So I think gold is set up nicely. Silver a little bit weaker, but it's not really holding up, or it's not performing terribly. Again, considering this environment. The other metals, other PMs, platinum was a little bit weaker. Tried to break out of this wedge, and it rolled over. Now this is a new contract. A lot of the time you'll get weird shakeouts like that on the new contract. So I'll be watching it this week here. I'll see if that tightens up. Palladium is still tightening up, and I'm watching this falling wedge here. So I'm looking to get back into these both. I've made money every time I've traded them in the last year and a half or so. And I think there is a long-term bottom setup here. Right now I'm just trading the ranges as I get the chance to, and eventually I think one of those will lead to a multi-year trend leg, but they have been kind of soft and choppy lately. Copper here, again, slight green week. Again, lower highs, keeps hammering on 4 to 4.1. I got to just give it the downside bias to 390 if this level breaks. So, I have no position in it. If it tries to break and we get like a liquidity grab candle, it could be a failed breakdown attempt, but right now the chart's not great. Over to the cryptos. Yeah, Bitcoin's still hanging in there. I still think it's in for some more consolidation, particularly on the weekly. I just think it has not done enough. If the 20 MA, you're going to say this again and again, if the 20 MA catches up, it can go higher. So that's really what I'm watching for Bitcoin on the weekly. ETH, I think, is okay. I mean, I know he had a good outside move with that sell candle, but if this just stays firm and can hold above like 32, I think it's fine. Like, look at the monthly here. Again, I'm just going to zoom out again. Does this look, bad to you? It looks to me just like again, another kind of consolidation pattern. You know, give it another month or so up in this range, and that should break higher. So again, I always like to zoom out. Gives you a much better idea here. But short term, you'd prefer to see it hold 32, and obviously 4K's resistance. If you break that, it's going to go up to new highs. So I just see consolidation in the crypto market right now. Again, for the spiders for SPX, just look at 6K. If we get through that, I think we go to new all-time highs. I don't know if that lasts too long. I will say, there are possible headwinds coming in January from what I can see. It's not a guarantee of anything, but just keep an eye on that. We'll watch the head and shoulder here. I'm not in love with it, but it's definitely a pattern. I'd be remiss to not bring it up, but I'm still going to give the bulls a bias here, especially as long as the Nasdaq is continuing to outperform, which it has been doing. So that is something that has generally served well over the years. So, anyways, guys, I'll wrap it up here. Again, you guys take care. Don't forget to come find Jason on Patreon. Come find me on ConverTrades.com, and I'll see you guys all next week.